morning to all traders and welcome to this Thursday's Market Insights video provided to you by Orbex. Today I want to talk about metals and energies. We're going to talk about actually the US oil, crude oil, and also gold. It seems that yesterday we've had a significant event actually on Twitter. Mr. Trump went out saying yesterday he's instructed actually the United States Navy to shoot down and destroy any and all Iranian gunboats if they harass American ships at sea. Now, with the fresh geopolitical tensions, of course, now this is supporting the markets, the oil markets, right? But I do indeed believe that this support is going to be only short term, unless if the situation escalates, which I doubt that will be the case, just to support the US oil, because this move from Mr. Trump looks like it is just a desperate move in order to support the US shale companies. Now, given, of course, the oversupply that we have in the markets, we have until middle of May or so until the storage facilities in the US would reach capacity, right? So now, with that being said, with the EIA again reporting nearly 15 million barrels in stock as well for the week, the situation in the oil market is probably going to get worse before it gets better. Now, on gold, on the other side, gold was supported by this move. It's just purely on safe haven demand, right? Although gold was already supported from before, and that was because there seems to be risks of deflation now. Now, obviously, you know, you will see the gold sometimes falling because of the inflation risks, but in this case, as the Great Recession, actually, we are seeing the gold prices moving higher. I want to go straight to the WTI here, right? And I'm down on the 1 hour chart. Now, we've got two different scenarios here because we were looking at this as a 1, 2, 3, 4, and 5, right? So wave 4 is here and wave 5 down there. Now, there is two scenarios. One is wave 3 is done here and we expect 4 and 5. The other one is that wave done ended down here to -40. And so we are now moving up impulsively for a reversal. Whatever the case is, I still see in the medium term this move to the upside being a minor 1, then 2, then 3, 4, and 5. And then this is either going to be an A or a 1, depending on whether this is a 3 or a 5. I really lean towards this scenario that I have actually marked over here. So I think this is going to be at 1, we have gonna have a wave 2, and then 3, 4, and 5 to complete A. Then we're gonna get B, C, and then move down again. Now this is long term, of course, if you ask me. But since Munich also says that we'll have until the end of the summer for the US economy at least to restart, then I would be surprised if that is the case. Now, if we go a little bit closer, this is impulsive to the upside, right? This move to the downside looks like a wave A. Now, because of the structure of this pattern over here, I think that we haven't ended wave 2 because this move looks still corrective, right? So we've got A, B, and I see this as a C wave to the upside, and this C wave is an impulse as the first wave was, right? Is an impulse. That means now we are most likely going to move a little bit higher, break above the 1624, which is wave 3. And once we have a new fresh high, at least for the week, let's say, then we can start most likely moving lower, an impulsive move again to take out wave 2 and then move higher. Now, of course, the other scenario is that we really ended down here, and this move to the upside is an impulse. It's a multi-degree impulse wave to the upside, right? But I'm not really a fan of this scenario, to be honest. Now, on gold, let me go out on the 4 hour chart before we get back to this. So just so you know, here's what I'm looking. I'm looking at this to move higher, right? Because I'm expecting this to be a wave B, so which is an A, a B, and a C, right? Now, the waves A and B have a 161 extension of 1811. Now, if we take out a beta wave 1 and 2 Fibonacci extension, The wave 3 ended at 1681. I mean, this is the 61 extension. It ended at 1705, so $25 higher than this. Which seems to suggest now that, I mean, if we assume wave 1 is going to be, wave 5 is going to be the same as wave 1, then it's going to take us up to the 261, right? That's the 1855. If we add the $25 difference here, the divergence, right, we're going to get to around 1880 for wave B, right? Now, of course, to get to the 1880, it means that we need to break above wave, the primary wave's extension to 1811. But whatever the case is, what I am saying pretty much is that I'm seeing gold moving higher, okay? To the 1811, 1855 would be actually a very good level to start considering some sells, even in the medium term, okay? Now, back on the 1 hour, okay, so that we have also a good idea on what I'm expecting in the short term. I am seeing this fifth wave to the upside, right? This is the last one. So we've got 1, 2. We've got wave 3 is 1, 2, 3, 4, and 5. This is an extended wave 3. Then wave 4, okay. And then we're going to get wave 5. Now, purely because of this structure, because we've got 1, 2, 3, 4, and 5, this is an A, right? So we've got A, B, C over here for B, and then we're going to get a wave C. Again, it's going to be a 5 wave move to the downside to take out wave 4, and that's going to be below the 1660, right? So the moment we break below the 1660, I mean, this area and up to the 1550 pretty much can be considered a good option for buys if, of course, we have some validations on indicators as well in order to proceed with wave 5 upwards. Okay. In case, of course, that doesn't happen, it means that we're going to get either, that wave, this correction ended here, we're going to move higher, or we might even move lower and have this even potentially being an ABC expanded flat, right? Because we just crossed above that level. This could be the wave B and this could be wave C. However, because of the structure of this move, as I said before, it looks like we have a multi-degree impulse move to the upside. So to me, this is a good buying opportunity when price, of course, get to a good level to on the downside.